Hello everybody, I am Amy and this is Swiss Trading School. This page is for anybody who's interested in becoming a professional day trader. That means if you'd like to learn day trading from scratch, you're very welcome to subscribe to my page and support my work. Today's program is actually a part 2 of a video I've already recorded because I'm going to talk about patterns, strong, reliable, juicy patterns. So that means we've got today's program will be about an introduction to technical analysis, and one major part of technical analysis is reading, understanding patterns. And it's not only important to spot a particular pattern, but it's also very important to understand what all these patterns express, because patterns are a way of communication. This is how people express their opinion, their overall mood, their overall sentiment on the market. So yeah, this is it. Make sure you subscribe to my channel, you share these important videos with your friends and with anybody who might be interested. And yeah, so let's get started. Alright, now as you already know from my very first video, which I uploaded to Introduction to Technical Analysis, there you have learned patterns are usually there to predict a particular price direction. And you already know that we always have two major groups, either reversal patterns or continuation patterns. One thing is very important here. You always have to keep the overall market structure in mind. That means the monthly, weekly, daily level. A pattern on an hourly level on its own doesn't express much. It doesn't say much. You always have to bear in mind the overall context. That is so important. Today's program will be about 3 strong patterns, and they can actually be considered to be even stronger when they occur on a monthly level or on a weekly level or on a daily level rather than on an hourly level. Yeah. So I am going to talk about the bullish abandoned baby, the bearish evening star, and the 3 black crowns. All right, now let's start with the bearish abandoned baby. This one is first of all a reversal pattern, and it usually appears at the low of a downtrend, as you can see here. After a series of candles mark lower lows. This candle on its own is called actually a doji, right? The one that looks like a cross. That's a doji. And whenever you see a doji means people ask now a particular question. It's like a question mark, right? It is like a question mark. So people ask a particular question, and the question here is, do we really want to continue with the downtrend? And the answer is no, because the market opens with a bullish gap. And then you get the confirmation, right? You have a confirmation, and you then have a change of the trend. It's an uptrend. And this, despite the convincing downtrend we can see here, and despite the bearish gap, because all of a sudden there are no new sellers on the market. Yeah, people are no longer, all of a sudden there is a lack of motivation to continue with this downtrend. That's the very first example. This is a daily chart. Yeah, these are basically days, Monday, Tuesday, Wednesday, etc. The second example, or the second pattern, is a bearish evening star. This one here. And the bearish evening star is actually a reversal pattern as well. You first of all see a series of bullish candles that carry the uptrend to a new high. You've got a new high, yeah? But then all of a sudden, fresh buyers fail to appear. All of a sudden, there is a lack of motivation to continue with the uptrend. As I told you earlier on, that doji across always means people are now reflecting about a particular question. That's like a question mark. People are no longer sure whether they'd like to continue with this uptrend here. And a gap down completes the pattern, because this predicts now the beginning of a decline. And sometimes this pattern, the bearish evening star, can trigger a broader scale downtrend. And this was actually the case here, right? For many, many days, you had a clear downtrend. And then on the same chart, we've got the bearish 3 black crows, which is a reversal pattern. And now this pattern usually starts at or near the high of an uptrend, as you can see here. And this pattern predicts that the decline is likely to continue. And in combination with the bearish evening star, this is, you know, a clear confirmation of the overall downtrend to basically continue. And this pattern as well might be a trigger for a broader scale downtrend. And that is also the reason why it is so reliable. Yeah. And this is also why we would not say, you know, just because you see now on a daily level a green candle does not mean that the market will recover, because you had 2 major patterns, 2 major signals expressing the idea that there is a lack of motivation to continue with an uptrend twice. Yeah, it got confirmed twice. So just because you see a green candle does not mean that this is now done and dusted, isn't it? All right, that's actually it for today. I hope it was interesting for you. Please make sure you subscribe to my channel and support my work. And I promise you there will be some more interesting videos I'm going to upload about strategies and about some more patterns, Fibonacci, moving average, etc. So make sure you subscribe to this page, and I hope to hear from you in the comment section down below. If there is anything you'd like to know, just make sure you leave a comment. Bye-bye. Hope to see you very soon. Bye-bye. Take care.